What's up guys, this is Thomas, and in today's video I'm going to show you if it is likely that we are revisiting the bottom, potentially making a new bottom, or if this right here is the bottom. As you know, in the markets it's never a yes or no. It's never like, do we see a new bottom, yes or no. It's a probability game. And in this video I'm going to show you the data and the points that I'm currently looking at, and then I will give you the probabilities, how likely it is that we are revisiting the bottom or if we have seen the bottom right here. But before we are getting started, make sure to leave a like and a comment for the algorithm so more people can see this. And without further delay, I would say let's get straight into this. Currently we are in the BTC chart. You can see here breakdown of this bearish flag. Currently we are in this red rectangle, which is the support box that we formed in May, June and July 2021, and we also dipped below it, still have bullish divergence right here. You can see from here to here lower price, and from this point to this point an higher RSI, which is bullish divergence, which means there is less conviction in the decreasing price right here. I have also pointed it out in the last video, and right now we are going into the next chart, which I also showed in the last video, which is this one right here. That are the Bitcoin longs on Bitfinex, and I have pointed it out in the last video. If we quickly put the BTC price here on the chart, we can see that currently we have the scenario that longs are going up while the price is decreasing, and we also had that here back in May, June and July. You can see here while the price is declining, longs are increasing, and once we saw the turnaround here in longs, so that means longs were decreasing again, they were selling into the rising price right here, and that were then the bottom of this correction, the summer correction that we had last year. And right now we are seeing something similar, but we don't have the turnaround yet. So let's put this one out again, but we can see a drastic slowdown. And that is also what I have pointed out in the last video. I said when this is the bottom right here, we should see a slowdown in the increasing long positions right here. We are doing this right now, but we are not decreasing yet. We had the first red day right here 2 days ago. Right now there are green candles again, but you can see that is basically sideways movement. So here not much is happening. That are 0.25%. You can also see this right here. We had an 118% increase in Bitcoin longs. But from the current standpoint, even if we not really have a turnaround yet, I would judge this as a positive sign, because we are not continuing to increase like this. So that is in regards of the Bitcoin longs. So far looking good. Then I also want to give you another good sign, and that is this one right here, the DXY, the dollar index. You know, we have also talked a lot about this on my channel in the last time, and here I said it's worrying that we have broken above these two red lines right here. These two red lines are the highs. This one right here, you can see it is the high from the COVID crisis, and this one right here from back at the end of 2016. We have broken above it, which was concerning, and right now we are back below it, and this is currently not looking like retest, so at least of the 2016 high, which is a positive sign. We also can see that the euro has stayed in its support zone. You know, right here we had the support zone that was also from back of the end of 2016, so the same time where the DXY peaked. And you know, we are taking a look into the euro right here because it has the highest impact on the DXY. The DXY is a basket of 5 currencies, and the euro is the biggest one in it with 60% valuation. So 60% of the DXY is the euro, and if the euro is going to the upside like we are seeing it right here, the DXY most likely will go to the downside. And here we have not broken this support. Just in the DXY we have gone above the resistance right here. And the thing why we are looking into the DXY, We have also taken a look into this. So if we are quickly putting the Bitcoin chart on top of this chart, you can see we have periods where we are decreasing in the DXY, and you can see that is in general very good. You can see these increases right here, BTC from 1k to 20k, and here also from the COVID low from 5k, 6k, all the way up here to 64k. So you see in the periods where we are decreasing in the DXY, that is good for the general equity market, so for the stock market, for the crypto market, and that is why we are taking a look into this one right here. And that is why I said this is currently a positive sign, that this is going back to the downside, because that is what we want to see. And right now let's jump into the next topic, which is also the question from the title, why nobody is watching this, and that is the fear and greed index. So the general market sentiment that we are having right now in the crypto market. You can see it is even lower than in the last video. In the last video I showed that it was 9. We see these lows very rarely, so these are historical lows right here in the fear and greed index. From this we have recovered a little bit to 14, and then with the drop that we had yesterday, so with this candle right here, we have dropped from 14 to currently 8. And 8 is, as I said, a historical low. We also have this chart, for example, right here, where we can see that is the Bitcoin price, and also with the colors, that is the fear and greed index on top of this. And you can see normally when we see this very low levels, like the 10, 9, 8 levels in the fear and greed index, that is marked right here with this very deep red color. So you can see right now we have this deep red levels. Here we also had them, here in the COVID crash we also had them, and here we also had them. So at turning points, at major turning points, so when we are at these extreme low levels in the fear and greed index, it is the most likely from the historical perspective that we see some sort of a bounce. But let's zoom in to this one right here, which is the summer correction that we had. And here you can see that we had this very low levels of the fear and greed index also. So here you can see we had the 12 level, which is also historically very low, but you see we have made new lows after this. Let's go into this chart right here. So the lowest levels in the fear and greed index we had here, but you can see we have tested the low once, twice, a third time, a fourth time, a fifth time, and also making new lows. They were not significantly new lows, but we made new lows right here. But the thing is, we have, after these levels, after we have seen these levels in the fear and greed index, we have bounced. We have not bounced directly sustainable, but we have bounced, and right now we are getting to the point where we take a look into the current situation and try to judge this here. Right now we are at these extreme low levels, which would speak for a bounce in the market, so which would indicate that we are moving from here to the upside. And now the question is this sustainable? I mean, we can also do something similar like in the last summer correction, that we are moving to the upside, but then retesting, moving to the upside again, retesting, making potentially even a new low, and then continue to do something like this. So that is also something that is possible. So after this move to the upside right here, which would be likely right now if we are taking a look into the fear and greed index and the market sentiment, which it seems like nobody's paying attention to. Everybody is super bearish right now, but let's just imagine we are doing this bounce right here to the upside. Doesn't matter right now how big this bounce is, can be that it just goes to here, also potentially could go to here to retest the resistance zone right here of the bearish flag. Could also be this levels or this levels, but that is not the thing that we want to know right here. The thing that we want to know right here is what is happening afterwards. Do we will see a retest or not. And here there is this thing that comes into play. That is the buyer index. This is a self-created index, and this one is showing us how many buyers are in the market. If there are very few buyers in the market, like right here or right here, this is a very positive sign. This means we have a lot of upside potential. This is, by the way, here after the COVID crash. On the other hand, if there are a lot of buyers in the market, like right here before the COVID crash, or like right here in April and May last year, 2021, that is then of course a concerning sign, which is indicating a bigger correction. And the thing right here is, you can see we are at these very low levels. Just I think 1 or 2 days ago we have even formed a new all-time low in this index, which means we have a lot of upside potential. But you can also see that currently we are stuck right here in this sideways range, which is also signalizing no interest in the crypto market. And in case we should stay in these levels right here, so currently you can see we are where the red line is, that is at the minus 59.4 level. And in case we are staying in this range, so in case we are just moving around right here and not managing it to leave this sideways range, this is signalizing for me there is no interest in the crypto market. And in case this should continue like this and we are moving to the upside right here, facing some major resistance levels, then it would be likely for me that we are making the move to the downside again and potentially retesting the old lows, potentially even making new lows. But that is depending on this index right here. So there are two possible scenarios right now for me, and that is the first one I have just explained to you. That would be a bad sign, and that would speak for a revisit of the old lows that we just made. In case we should manage to move to the upside, breaking out of this sideways range right here, this would be a very positive sign for me. This would signal interest in the crypto market, and then I would also expect a continuation of this move to the upside right here, which would be a very positive sign for Bitcoin and also for the general crypto market. By the way, as I said, this indicator right here is self-developed, so you will get it nowhere else, and the only place where you get regular updates on this is on my Patreon account, and that is the first link in the video description. If you want to have access to this, then definitely make sure to check that out. As I said, it's the first link in the video description, definitely worth it. And before we are going into the summary, let me go into a final chart or a final topic, and that is the stablecoin topic that we have right here. Right now we are in the Tether chart, so the USDT chart, which is the most used stablecoin in the crypto market. I'm sure you all know this, but I'm also sure that you all noticed or have heard of the UST coin, so the Terra stablecoin, that has plunged a lot, currently just at 9 cents. It used to be a stablecoin, but not worked out quite well so far. Also therefore this massive Terra Luna drop right here. I've also made a separate video about Terra Luna. I will link this right here. There I'm exactly explaining to you why this has happened and why likely this is continuing to happen even if we see a slowdown. Not the topic of today's video, but if you're interested, if you are invested in Terra Luna, hopefully not, because these are losses I wish nobody to have, because it's a total loss right here. But in case you are curious, the video link is right here. The thing right here is, on this day this happened, so the UST stablecoin has dropped. We also have seen a drop in USDT. You can see this right here. Looks quite dramatic, but it's just to 94 cents. So definitely not as bad as in the UST stablecoin, but you can see currently we are not back at the normal levels, so at the $1 levels. We are at 99.9. I know this is not a big difference, but we are not in the normal range yet again. We also had this in the USDC stablecoin. Here also looking quite dramatic, but here it was the smallest drop, just to 99.5 cents. Here we are also back into the normal range. Currently we are also at 99.999, but this is the normal range. So if it moves this one tick up, we are at $1 again. So this is normal. The thing right here is that we want to see the USDT back at $1, even if it is just a tiny tick right here to the upside, but that is what we want to see. And then there's also one thing that is also a little bit concerning. So I've showed you 3 positive things right now. I've showed you the DXY, the Euro stuff. I have showed you the sentiment stuff. I have showed you the longs, so the Bitcoin long stuff, which are 3 positive signs. But this thing right here, if we are taking a look into the market cap, this is something we have never seen, and that is something that Noah has brought to my attention. That is a decline in the market cap of Tether. You can see from 83 billion to currently 75 billion, so that are roughly 8 billion USDTs that are out of the market. If we are comparing this to the stock market, we know that less money in the market is in general not a good sign for the market. We have seen this after the COVID crash with the money policy. Everything was easy, markets moved to the upside, lots of money get printed, therefore also lots of money is going into the market. Right now we are seeing a very strict money policy, which we are also seeing in the prices. So big money amounts right now are not flowing into the market, and therefore also the prices are suffering. And this right here could be an early warning signal for this. Let's hope it doesn't, because if we are taking a look into the USDC stablecoin, into the market cap, we can see here we had a decrease, but that is for a longer period of time. But here we had an increase in the last time. So here we have increased from 48 billion to 52 billion. So roughly 4 billion increase. Here we have an 8 billion decrease, so which means it's about 4 billion. But in general, this is something we don't want to see. So we don't want to see a decline in the market cap of the stable coins, because that is meaning that the money is moving out of the market. And as I said, as I just described it with the stock market, this is a negative sign for the crypto environment. So, and that is the negative point that I also want to point out right here. So USDT, have to watch this. Would be very nice to see this back at really $1 and not 99.8, 99.9. If it would be 99.999 like the USDC, this would be normal, but that's not the case. And right now I would say let's get quickly into the summary and then end the video. So what I'm currently looking at is the Bitcoin longs. I want to see a decrease in Bitcoin longs. From the fear and greed index, it would be very likely if we are seeing a move. Let's delete the drawings. What would be likely right now from the fear and greed index would be that we have some sort of increase in the Bitcoin price. Then we want to see also an increase in the buyer index, leaving this rectangle right here, showing and signalizing some interest in the crypto market. This would speak for a continuation of increasing prices. In case we are not seeing this, so in case we are staying at these levels right here, it would be likely that then we see some pullback here, potentially even revisiting the bottom right here, making even a new bottom would then also be possible. But that is the thing that we can just answer once we are back up here. So from my point of view, it is more likely that from here on we are moving to the upside and not directly revisiting the bottom. And when we have done this, then we are taking a look into the buyer index. Also here, as I said, a DXY currently is looking very good, that we have not continued to move to the upside right here. Also Euro USD has stayed in his support zone, which is also a positive sign. What we want to see here is the USDT stable coin is moving back to the $1 mark. I know it's just a little tiny jump, but we want to see this. This would be very nice. The thing that we not want to see is a continuation of this downward trend right here in the USDT stablecoin, at least we don't want to see it in also the USDC stablecoin. So in general, in the stablecoins, we don't want to see a decrease in market cap. We want to see an increase, because this is meaning inflowing money in the market, which is positive also for the general crypto market. So I will not judge this too dramatically right now, because we have a 8 billion decrease here, 4 billion increase here. So probably that is a little bit just shifting, because the USDC stablecoin, as I showed, has not dropped as much as the USDT. Also collateral wise, I would say USDC stablecoin is more trusted than USDT. So that's also my personal opinion about this. So that's a compressed version of this speedrun style. In case this video was helpful, as I said, feel free to leave a like and a comment for the algorithm, so more people can see this, more people get this information, and you help the channel to grow. That's it for this video, and I will say we will see each other in the next one. And as always, guys, have a nice day.